Once again, PayPal has fallen below $60 per share. This is presenting an interesting potential opportunity for value investors that have been waiting for a good entry point on PayPal. Now, it is substantially down from its all-time highs of roughly $300 and some dollars per share, but that doesn't necessarily automatically make something a good value. But PayPal is a growing business. People say dying, but I sit here and I see revenue growth very consistent, slowing down recently, granted, but still, nonetheless, increasing. Okay? They've managed to buy back a lot of shares recently with these cheaper prices. They've managed to increase things like profitability and cash flow over a longer stretch of time, but granted, there are temporary compressions. Their margins are being squeezed a bit due to competition and the sort, but overall, analyst projections still have EPS climbing over the next few years to levels that are far higher than what they were doing pre-pandemic, when they were on their way to those all-time highs in 2021. And even the 2023, 2024 numbers are going to be substantially higher than when they were at their all-time highs. So how is it that revenue will continue to climb, EPS will continue to climb, or at least that's what's being projected, yet the price languishes? And this is because price and value are often disconnected in today's market. I've made it no secret that I am interested in PayPal in these 50s and 60s price points. Certainly below 60, I think it starts to become a pretty compelling case. I've said this in numerous videos. Now, when you look at a pretty conservative price DCF model based on the earnings numbers, I'm getting that with a 12.5% discount rate, which, again, this is above pretty much any standard discount rate that gets applied. You usually see somewhere between 8 and 10% from a lot of different analysts and such when they run DCF. I'm starting with the projected 2023 EPS based on analyst projections, which they say will be about $5.05 per share, giving them credit for their current tangible book value, which is $7.22. PayPal has a pretty solid balance sheet, to be honest with you, and only projecting 7.5% growth in their EPS over the next 10 years. The actual number, I think, it has the potential to be a good amount higher than that. I think 9 or 10% is actually really achievable for PayPal, but the point is to be conservative, factor in that there may be a couple years where things don't go so well. 2022 is a perfect example of that for PayPal. Things did not go well in 2022. And so you have to use conservative numbers to factor that in. And then if things go better than you project, well, you just make more money. Now, we also anticipate that slowing down after 10 years to about 4%, which, is just a little bit ahead of inflation long term. And you come out with these numbers with a fair value somewhere in the $68 range, which, granted, according to what numbers you project, and if you trust the analysts more, this could be quite low. Okay. A lot of analysts, I mean, it's on the low side of what the actual analysts even think for the price. On the high side, there are some analysts that think in 12 months, this thing is destined for $126. Now, I really, really take analyst price projections with a hefty dose of rock salt, because they're just flat out wrong so often on those. But they do tend to have some insight on projections of revenue and earnings, because they follow the company's financials and the guidance very closely. They participate and listen in on all of the earnings calls. So those numbers I trust a little bit more, but I still assume slightly lesser numbers because, again, analysts are fallible. They tend to kind of all gravitate. There tends to be a little bit of, I guess, groupthink or whatnot in those circles. So don't hang your hat 100% on the analysts. Come up, like, do the sniff test. Like, does the number that you're putting in there make sense to you? Just common sense wise, right? Now, it's no secret that PayPal is facing competition, but look at this. Downgraded on growing Apple Square competition. That growing competition, this article is 3 days ago. This is not news. This is just the noise, right? The market overall has been taking a dump. Okay. I'm not fearful of the future of PayPal as a profitable business. Now, can the growth slow down or even stop at some point? Absolutely. I don't think we're quite there yet. We definitely are seeing a certain degree of slowdown. However, I think it's really easy to overblow that and tell yourself that this thing's going to zero because, hey, it is down 80% or so off of its all-time highs. That's scary. That doesn't feel good, especially if you've been holding this whole time. Like if you bought it on the way up or even at the top. It's super hard to watch this share price tumble. However, nothing in the valuation model, like the numbers I would have to use to get this number to 300 are so astronomically high. I don't think I would ever get there. Could it be worth that in 10 years if they keep growing and margins improve, etc.? Maybe, but you can't, like, I'm not going to pay today for the assumption that they're going to knock it out of the park for 10 years. That is a good way to get burned in the long run. Now, some people think that PayPal is the past of payment processing, but personally, I think that they have a lot of potential if they can manage to squeeze more money out of Venmo, since they own Venmo. I personally, and most people that I know, prefer Venmo over a lot of the mobile app alternatives for peer-to-peer payment. I know they've been trying out advertising the Venmo credit card. I get notified every so often that they want to give me a Venmo credit card. And I don't know yet really what the long term is for Venmo and the Venmo credit card in terms of how much money PayPal will see on the bottom line. But that's certainly interesting, okay? It's definitely a feather in their cap. I definitely just think PayPal is here to stay. They're extremely established in this payment space. Pretty much every online merchant in existence that does e-commerce has an option to check out with PayPal. And I pretty frequently select that option myself. So I don't really see it going away. And personally, I like how much money they bring in. I like their balance sheet. I like the fact that they focus on buybacks during these periods of low valuation, especially. And I think that they can drive a good amount of shareholder value going forward. So I actually have a cash secured put sold at the $60 level, which is currently in the money. So if it stays below 60 for a while longer, I am likely going to be assigned 100 shares of PayPal. And I will happily take the assignment at that price and do with it what I will. I'll keep you up to date as to whether that actually happens. So for the moment, I would like to just remind you all to please subscribe to the channel. Hit the Discord, link in the description. I love chatting with people there. Lively bunch. Also, consider becoming a channel member and subscribe to the live show, Cashflow Kings Live, which I co-host with Ryan Dengler. That's about all I got for you today on PayPal. I'll keep you up to date as to what my position is, if anything, and how I'm viewing the company going forward. Take it easy, everyone. Have a wonderful day.